Welcome back to The Explainer, everyone. Today, we're breaking down CrowdStrike's absolute blockbuster Q2 FY 2027 investor briefing. We are looking at a company sitting right at the chaotic intersection of two massive trends: hyperfast AI adoption and a threat landscape that's frankly escalating out of control. It's a pretty fascinating spot to be in. On one hand, you've got enterprises rushing to inject AI into literally every workflow they have. On the other hand, highly sophisticated threat actors are out there exploiting those exact same technologies. CrowdStrike is right at the epicenter of this storm, and honestly, understanding how they're playing their cards right now is absolutely crucial if you're tracking the future of cybersecurity or enterprise software.
Okay, let's jump right into the deep end with what management is saying. They're calling this their best quarter in history. Now look, when leadership at a company of this scale drops a bold statement like that, we have to pay attention. It's one thing for execs to be cheering on their own team, but it's an entirely different story when the financial data actually backs it up and turns heads on Wall Street.
And Wall Street? Oh, they absolutely agreed. The stock surged a massive 15% right out of the gate following this news. Investors and analysts clearly saw a fundamental shift in the company's trajectory here. When a stock of this sheer size jolts 15% in a single day, you know that's not just a blip or your run-of-the-mill market volatility. It is a loud, unmistakable signal that the engine of this business is accelerating, and it's practically reshaping expectations for the entire cyber sector. So here is our game plan for today. First, we'll dig into the numbers that matter. Second, we'll talk about why AI is the real game changer here. And third, we'll tackle the valuation, the opportunity, and the risk.
All right, let's kick things off with section 1, the numbers that matter. And spoiler alert, it was a beat across every single major metric. Let's fire through these fast. Revenue hit $1.47 billion. That is up 26% year over year, cleanly beating the $1.44 billion consensus. They also posted adjusted earnings of 31 cents a share, coasting right past the 29 cents everyone expected. You know, in today's macro environment, CIOs are guarding their IT budgets like hawks, and they are constantly trying to consolidate software spend. So beating estimates by this much, it's incredibly hard to pull off. It proves that cybersecurity is essentially a non-negotiable expense right now, and CrowdStrike is doing a phenomenal job capturing those tight enterprise dollars.
But here's where it gets really wild. Looking forward, their annual recurring revenue, or ARR, hit $5.84 billion. And this marks their fourth consecutive quarter of accelerating growth, up 25% year over year. Just think about the gravity of that for a second. 4 straight quarters of acceleration at nearly $6 billion in ARR. Growth investors absolutely live for this stuff. Normally, the law of large numbers kicks in and growth naturally slows down. The fact that CrowdStrike is picking up speed at this size, it's a huge testament to the sheer demand for their entire product suite.
Next up is RPO, or Remaining Performance Obligations, which jumped a massive 49%. This is such a vital metric because it's a leading indicator. It doesn't just tell us about yesterday, it tells us about tomorrow. RPO is basically revenue that's under contract but hasn't hit the books yet. Seeing a 49% spike is a massive signal of market confidence. It means customers aren't just dipping their toes in for a year. They're signing larger, multi-year deals, essentially cementing CrowdStrike as the bedrock of their security infrastructure. And just to put a bow on these jaw-dropping numbers, net new ARR added was $333 million. That's up a stunning 51% from last year, proving that demand isn't just steady, it's accelerating fast. When you pull back and look at the whole picture, the takeaway is super simple. This wasn't just them scraping by to beat earnings by a few pennies. It was a decisive, overwhelming blowout across every single metric that matters.
Okay, let's move into section 2. Why is AI the game changer? What's the actual catalyst behind all this momentum?
Well, CEO George Kurtz calls this paradigm shift a Mythos moment. It's a really interesting concept that we need to unpack because it is the main driver behind their massive success and platform consolidation right now. Essentially, a Mythos moment is a watershed event. It's when organizations suddenly wake up and realize, hey, securing AI workloads requires a totally new approach. The old playbook with clunky firewalls and fragmented tools, it's like bringing a knife to a gunfight in the age of AI. Data moves too fast, code is being generated dynamically, and companies are scrambling to build a security posture that's as smart and adaptive as the AI they're trying to protect.
And you can literally see this realization playing out across their product lines. Customers are ditching those legacy point solutions and flocking to CrowdStrike's unified platform. Just look at Falcon Flex, their platform consolidation program. Its ARR more than doubled, up 101% to $2.29 billion. It makes it so frictionless for customers to just keep adding modules. Then there's their next-gen CM product, which just passed $695 million in ARR, taking a massive bite out of the older logging tool market. And maybe the craziest stat? AIDR, their AI native detection and response, nearly tripled its ARR compared to last year. Customers are desperate for native AI security, and they are voting with their wallets.
So what we're witnessing is CrowdStrike executing an absolute masterclass in the classic land and expand strategy. It's a simple 3-step playbook. Step 1, become the default choice. And this is happening right now because IT departments are, frankly, kind of panicking about employees bringing unvetted AI tools into the network. They need an immediate shield. Step 2, once they're in the door, expand that footprint. Convince the customer to drop their fragmented, older solutions and switch to CrowdStrike's integrated modules. And step 3, as they rely on CrowdStrike for everything, cloud, identity, you name it, the revenue per customer naturally drifts higher and higher. The thesis is beautifully simple, and right now, the execution is spot on. Which brings us to our final section, valuation, the opportunity, the risk, and the great bull versus bear debate. Look, we've got to talk about the elephant in the room and impartially weigh the bullish optimism against the bearish reality. On the bull side, things look amazing. The company confidently raised its full-year revenue guidance to around $6 billion. They're literally expecting 34% net new ARR growth. Analysts are all over it with a strong buy consensus, and firms like Jefferies have targets up to $245. The momentum is totally undeniable. But you absolutely cannot ignore the bear case here. The stock is trading at a massive forward PE of about 135 times and a price-to-sales ratio of 31 times. By any historical standard, that is incredibly expensive, which is exactly why Morningstar pegs its fair value way down at $152. It creates this fascinating tug-of-war between stellar business performance and a really steep stock valuation. Bank of America really hit the nail on the head here, calling the stock priced for perfection. At 31 times enterprise value to sales, there is virtually zero margin for error, especially since the stock has already run up nearly 80% over the past year. When a stock is priced for perfection, it means even the tiniest hiccup, like a slight slowdown in growth, a weird macro headwind, or a new competitor making waves, could trigger a brutal pullback. The company itself could still be operating flawlessly, but because expectations are sky high, all that good news is probably already baked into the premium you're paying today. Ultimately, where you land on this depends entirely on your own risk tolerance. Are you a growth investor ready to ride the AI wave, or a value investor worried about a pullback? For the growth crowd, the business momentum here is exceptional. The AI tailwinds are real, this isn't just a hype cycle, and the platform consolidation strategy is printing money. It's a high-reward play if you think they'll own the next decade. But for the value investors, the valuation is dangerously rich. The margin for error is paper thin. And honestly, it is totally reasonable to look at CrowdStrike, say, wow, phenomenal company, and still decide to sit on the sidelines waiting for a better entry point. So as we wrap up this explainer, I want to leave you with one big question to chew on for your own portfolio. Given CrowdStrike's flawless execution, but keeping in mind that intensely steep price tag, is the AI supercycle truly worth the premium? If you think AI security is a massive multi-year wave and CrowdStrike is the undisputed king, maybe it is. But definitely take a hard look at your own investment timeline and risk appetite before making a move. Thanks so much for joining me to break down these wild numbers, and I'll catch you on the next explainer.